Hello viewers, welcome to my channel. I'm Hasham. So now I'm going to start a new topic in the subject business law. In this business law, already I have completed Indian Contract Act, Sale of Goods Act, then Companies Act. So under Companies Act, I have already uploaded the videos on management of companies, regarding the directors, regarding the meetings, and now I am going to start the last and final topic in company law. What is the topic? Winding up of companies. So in this video, I'm going to explain you about the meaning of the term winding up and what are the modes of winding up by the Companies Act. So watch the video till the end, because in examination you may be asked a question regarding explain the winding up of companies, explain the provisions of Companies Act regarding winding up of companies, and what are the modes of winding up. So if you watch with full concentration, definitely you will get a lot of knowledge, lot of confidence on this topic. So already I have uploaded so many videos. First time if you are joining my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects like financial accounting, cost accounting, advanced accounting, corporate accounting, advanced corporate accounting, managerial accounting, financial statement analysis, then income tax, business statistics, financial management, investment management. So many videos I have uploaded. Select your subject, select the video, watch. Definitely you will get a lot of confidence on the subject. Now, winding up of companies. See here, a company will come into existence by incorporation. Without incorporation, no company will be formed. So here in India, we are having Companies Act 2013. So Companies Act 2013 has given the provisions regarding how to incorporate the company. So without incorporation, no company will come into existence. At the same time, when the company is wound up, that the company is closed, again provisions are given by the Companies Act how the company will come to an end, how a company will be closed. So closing a company is called winding up. That means stopping the life of the company is called winding up. So winding up of a company is defined as the process by which the life of the company is brought to an end. So it is a process. Winding up of a company is the process by which the life of the company will bring to an end, will be brought to an end. So in other words, winding up means the proceeding by which a company is dissolved. So we can call it as dissolution of a company, or we can call it as winding up of the company. Bringing the life of the company to an end. Then the assets are disposed of. Just like if we are having a sole trading concern, our private business, we can close our business as per our like. But a company will be closed according to the provisions of the Companies Act. So at the time when the company is wound up, all the assets will be disposed of. All the assets of the company will be disposed of. The amount will be realized. From that amount, liabilities, the amount owed to others, the liabilities will be paid. And after payment of liability, if any surplus is left, that surplus will be distributed among the members, among the shareholders according to their holdings or according to their rights. So here the assets are disposed of. Disposed of means sold off. The liabilities are paid, and the surplus, if any, is then distributed to the members in proportion to their holdings. So whenever a company is wound up, all the assets are sold. From that sale proceed, the amount will be paid to outside liability. After paying out to outside liability, if any surplus is left, that surplus will be distributed among the members. Winding up of a company is the process whereby its life ended and its property is administered for the benefit of creditors and members. All the assets will be sold off, and the amount will be utilized for payment of liabilities and the settlement of the rights of members. An administrator called liquidator is appointed, and he takes control of the company. That means whenever a company is wound up, an administrator will be appointed, and that administrator is called liquidator. So liquidator is a person who is appointed when the company is wound up. The liquidator will take charge of the company. He will realize all the assets. He will sell off all the assets, receives the cash. From that cash, he will make the payment to liabilities. After payment to liabilities, if any surplus is left, that surplus will be distributed among the members according to their rights. That is the winding up. Now, in simple words, winding up means applying the assets of the company in the discharge of its liability and returning any surplus to the persons entitled to it. Simple words, we can say winding up is the process by which the assets will be sold off, the liabilities will be paid, and any amount is left that will be distributed among members. That's all. So far here I have explained you about the meaning of the term winding up. Now second topic is what are the modes of winding up. So according to the Companies Act 2013, there are two modes of winding up. The first mode of winding up is called compulsory winding up or winding up by the tribunal. Winding up by the tribunal. This is the first method. Second one, voluntary winding up. Now winding up without the intervention of the tribunal. Without the interference of tribunal. That is voluntary winding up. Now I'll explain you each one, because in examination very frequently they will ask a question regarding what do you mean by winding up and what are the modes of winding up. I've explained you the meaning of the term winding up. Now modes. First mode is compulsory winding up by the tribunal. By the tribunal. Here one point you have to remember, earlier this company winding up order will be given by the court. Now according to Companies Act 2013, the law has been changed. Now the power of giving the compulsory order will not be in the hands of court. It will be in the hands of the tribunal. It is called Company Law Tribunal. So National Company Law Tribunal, this is the authority which can pass the order for winding up of the court, compulsory winding up of the court. Now, compulsory, I am going to explain you each. First, I will explain you about what is compulsory winding up, when the compulsory winding up order can be given by the tribunal. That I am going to explain. So, when a company is wound up by an order of the tribunal, it is called compulsory winding up or winding up by the tribunal. So, Section 271 of the Companies Act 2013 has given the grounds on which a compulsory winding up order will be given by the tribunal. So, this section 271 of the Companies Act has given the powers to the tribunal to give the order for compulsory winding up of the company. So, on what grounds this tribunal is having the power to order compulsory winding up of the company? So now I am going to explain you about the grounds on which a tribunal can give the order for compulsory winding up. First ground is company's inability to pay its debts. If the tribunal finds that a particular company is unable to pay the liabilities, not in a position to pay the debts of the company, then the tribunal will have the right to give the order to the company to wind up, finished. First ground is when the company is unable to repay the debts of the company, then the tribunal will have the right to order for compulsory winding up. Secondly, passing of special resolution by the company. Sometimes a company itself pass a resolution in the meeting that our company should be wound up by the court. The company will request the tribunal. The company will pass a resolution. In that resolution, it will ask the tribunal to give the order for compulsory winding up. So, requesting by the company to the tribunal to give the order. But in this case, the tribunal will not only see the interest of the company, but also the tribunal will see what will happen if we give compulsory winding up to the public also. Because tribunal will not see the interest of only the company, but it will also see what is the effect if winding up order is given to the public at large. So here, when a company has passed a resolution for its winding up by the tribunal, however, the tribunal not only considers interest of company but also interest of public prior to making an order. Before giving an order, the tribunal will see what is the effect of this order on the company as well as on the public at large. The two cases, two grounds I have explained you. First, the tribunal may give order to compulsory winding up if the tribunal finds that the company is unable to pay the debts. Secondly, if the company itself passes a resolution asking the tribunal to give the order for compulsory winding up. Third case, inappropriate act of the company. Sometimes the activities of the company are inappropriate, fraudulent. In that case also the tribunal may pass the order to winding up. So what are the inappropriate activities of the company? When a company has performed the activities that are against the interest of integrity and sovereignty of India. If a company is engaged in those activities which are dangerous, which are against the integrity and sovereignty of the country, or security of state, or public order, or morality. Suppose if the company's activities are against the integrity, against the sovereignty, against the security of the state, or public order, or morality, in that cases, the court may order that this company must be wound up because its activities are fraudulent, its activities are inappropriate. Sickness of the company. If a company is permanently sick, there is no possibility of revival of the company. If the company is so sick that the tribunal finds that it is difficult to revive it, it's very highly impossible to revive it, then in that case the tribunal will pass an order, the company should be wound up because it is sick. There is no chance of survival of the company. If the tribunal finds that a company is completely sick and there is no possibility of its revival, then the tribunal passes the order to wind up the company. Next one, application by the registrar or any authorized person. Sometimes the registrar of companies will ask the tribunal to give the order to wind up of the company, or an authorized person. An authorized person or registrar of companies may apply to the tribunal, request the tribunal to pass an order to wind up this company. So under what circumstances the registrar of companies or an authorized person will ask the tribunal? Here we'll see. If the registrar of companies or an authorized person makes an application to the tribunal, make an order for winding up of the company, this can happen in the following cases. Some three cases are specified here. In these three cases, if any one of these three cases happen, then the registrar of companies or an authorized person will request the tribunal to come forward and give the order to wind up the company. So when the request will be given by registrar, if any one of the three cases happens. What is the first case? If the company carries its affairs in fraudulent order. If the registrar of companies or any other authorized person has seen that the company is doing some fraudulent activity, some frauds, then in that case the registrar will ask the tribunal. Second case, if the company was set up with an unlawful and fraudulent purpose, the objective of the company is unlawful, the objective of the company is to make the fraud, in that case also the registrar of companies or any other authorized person can request the tribunal to give the order for winding up. If the people involved in the formation and management of the company affairs are found to be guilty of misconduct or fraud, the person who are responsible for forming the company or management of the company, who will manage the company? Directors. If the registrar or an authorized person finds that the people who are at the helm of the company, who are in the management of the company, they are doing some fraud, they are doing some misconduct, so they are engaged in some misconduct or fraud, then the registrar of companies or an authorized person will request the tribunal to pass an order for compulsory winding up of the company. So these are the cases. Next, default made in the financial statements or annual returns. So in this case, if a company fails to submit the annual returns or financial statements to the registrar of companies in the preceding 5 consecutive financial years, 5 consecutive financial years, if the company fails to submit the financial statement or annual returns to the registrar of companies. So according to Companies Act 2013, every year the financial statements of the companies must be submitted with the registrar of companies. If a company fails in 1 year, to 2nd year, 3rd year, 4th year, 5th year, consecutively, if in 5 years the company failed to submit the annual returns to the registrar, then the tribunal will pass an order to wind up the company. That's all. So totally 6 cases I have explained you regarding the modes, regarding the grounds on which a compulsory order to wind up the company will be given by the tribunal. Come on, so we have discussed there are 2 types of winding up. That is, first one compulsory winding up and second one is voluntary winding up. The compulsory winding up is the winding up in which the tribunal will order that the company should be wound up. So under what circumstances, on what grounds the tribunal may pass the order to winding up? Just now we have seen what are the grounds. The first ground was company's inability to pay the debts. Already we have discussed. Second one, passing of resolution by the company. The company may pass a resolution and request the tribunal to give the order to winding up the company. Inappropriate acts of the company, then sickness of the company, application by the registrar or any authorized person, and last one, default made in the financial statements or annual returns. So 6.6 grounds we have seen on which the tribunal will pass the order to wind up the company. One more last ground is just an equitable reason for winding up. Suo motu, that means on the self ground, the tribunal may pass the order that the company should be wound up on just an equitable reason. So what is this just an equitable reason? Wide powers have been given to the tribunal to consider a number of factors. If the tribunal thinks that the company is not, in the favor of the shareholders, not in the favor of the public, the tribunal may pass the order to wind up the company. So this is the last ground on which the tribunal may pass an order to compulsory wind up the company. So what is this? According to section 271, if the tribunal considers that it is appropriate and just to wind up the company, then it may make an order for the winding up. If the tribunal feels that it is just and equitable to wind up the company, so it will pass the order to wind up. So while passing such an order, tribunal generally consider the interest of the company, its creditors, employees, shareholders and the society. This power can be exercised by tribunal only if it considers that the company affects the shareholders' rights, the creditors' rights, the employees' rights or public society rights. How the company is affecting all the different parties, that will be considered while passing an order to wind up the company on the basis of just an equitable ground. In the past, the tribunal has made an order for winding up of the company in the following situations. So in the past history, if we see, the tribunal has given the order to wind up the company in the following situations on the basis of just an equitable ground to wind up the company. What is the first one? Deadlock in management. Actually, management will be in the hands of the directors. If the directors are not on the speaking terms, if the directors are fighting, if there is no cooperation among the directors, deadlock of directors, then the tribunal may pass the order that the company should be wind up, because there is a completely deadlock in the management. There is no possibility of any reconciliation between the directors. The directors are not on the speaking terms, then the company will be wound up. deadlock in management. Secondly, loss of substratum. If the main objective for which the company was formed is not attainable, if the main objective for which the company was formed is not attainable, then the company will be wound up. Example, a new company was formed to manufacture a certain thing, provided the company will get the patent right from the government. Suppose the government has not given the patent right, then the company will be wound up, because the substratum, the objective for which the company was formed, is not attained. So the company will be wound up by the order of the court. Next one is losses. If the tribunal feels that the company, there is no possibility of getting the profit, the company is continuously incurring losses, and there are no chances that the company can be able to earn the profit, continuously losses the company is incurring, then the tribunal will have the right to order the company to wind up. Next one is operation of minority. Sometimes the directors will misuse their power in order to suppress the minority shareholders. If the minority shareholders are adversely affected due to the wrong decisions taken by the directors, operation of minority, if this is the situation, the tribunal may order that the company should be wound up. Next one is fraudulent and illegal purpose. If a company is formed with a main purpose to defraud, to make fraud or some illegal activity, then the tribunal will pass the order, company should be wound up. Next one is public interest. If the tribunal sees that the company is affecting the public interest, that means the public will incur loss. The company has been formed mainly to defraud the public. So public interest, if it is affecting, then the tribunal will ask the company to wind up the affairs. Failure to pay dividend. If the tribunal thinks that the company is not paying regular dividend to the shareholders, that shareholders' expectations are not fulfilled, then in that case also the tribunal may pass the order to wind up the company. Last one, bubbly company. Bubbly company means a company which is there only in the name. The company does not have any assets. The company does not have any foundation to run the business. The company is there only in the name. So normally this bubbly company will exist mainly to dupe the public, to extract the money from the public, and will not run any business. They will diversify the funds. So if that is the situation, it's a dummy company, it's a bubbly company. So in that case, the tribunal may order that the company should be wound up. So in the past, these are the circumstances in which the tribunal have given the order to wind up the company on the basis of just and equitable grounds. So these are the 5 grounds we have seen on which a company may be wound up compulsorily by the order of the tribunal. First part is what? The second part is voluntary winding up. 2 types of winding up. Compulsory, just now we have seen. Second and last type of winding up is the voluntary winding up. Voluntary winding up means winding up of the company without the intervention of the tribunal. Without the intervention of the tribunal, company itself wants to wind up. So voluntary winding up is another method of winding up of the company, either by creditors or by members. So this voluntary winding up may be conducted either by the members, shareholders, or by the creditors. Then Companies Act 2013 explains only about voluntary winding up, which takes place after acceptance of members and creditors. That means both should agree. The members as well as creditors should agree that we want to wind up the company. If there is a proposal to wind up and acceptance by both members and creditors, then voluntary winding up can take place. In order to have voluntary winding up, an appropriate resolution must be passed by the members and creditors of 2/3 value must give their approval to such resolution. 2/3 in value of the shareholders as well as creditors. 2/3 of the creditors in value and 2/3 of the shareholders in value must give their consent, approval for winding up of the company. A resolution must be passed in which majority, 2/3 of members and 2/3 of creditors should approve the resolution of dissolution. The company cannot proceed for voluntary winding up unless it gets approval from creditors. Only members cannot resolve. After getting the resolution of members, the company has to get the resolution from creditors also. So that's why hence Companies Act 2013 eliminated the variation between members and creditors winding up. Earlier, before Companies Act 2013, two types of voluntary winding up are there. Voluntary winding up by creditors and voluntary winding up by members. These two are the different voluntary winding ups according to earlier Companies Act. But now Companies Act 2013 has eliminated the distinction. Now it says the company will be voluntarily dissolved, voluntary wind up only by the members after getting the consent from creditors. So sometimes creditors recommend to wind up the company by the tribunal by passing a resolution. Sometimes the creditors themselves will resolve and make a resolution by creditors and pass this resolution to the tribunal and request the tribunal to interfere and wind up the company. This is the voluntary winding up. So now I am going to explain you the procedure of voluntary winding up. So what are the steps to be followed by a company in order to voluntary winding up of the company? The first step is conduct a board meeting. The first step for voluntary winding up is calling up a board meeting and pass a resolution with the declaration given by directors. A resolution has to be passed in the board of directors meeting resolving that the company can be able to pay the debts. Company is in a position to pay the outside liabilities, or the company has sufficient assets which can be sold and the amount can be paid for the liabilities. The company is in a position. That declaration have to be resolved in the board meeting. First step. Second, issue notices for calling of a general meeting, proposing the resolution along with the explanatory statement. Second step, after passing the director's resolution, board of directors resolution, this resolution along with explanatory statement should be given a notice to the shareholders regarding general meeting. The company has to conduct general meeting. For conducting the general meeting, a notice has to be given to the members. In that notice, specifically given the resolution passed by the board of directors along with explanatory statement has to be given to the members. Then in general meeting, pass the ordinary resolution for the purpose of winding up by ordinary resolution or special resolution by 3/4 majority. The winding up shall be started from the date of passing the resolution. Now it depends what type of winding up we are conducting. If the winding up requires only ordinary resolution, then the company has to make an ordinary resolution and get the resolution approved from the members. Otherwise, if the winding up requires special resolution, then 3/4 of the members should approve the proposal of winding up. So we have to see in this general meeting whether special resolution is required or ordinary resolution is required. If ordinary resolution is required, ordinary majority is sufficient. But if special resolution is required for winding up of the company, 3/4 of the members must. So general meeting. In general meeting, pass an ordinary resolution for the purpose of winding up. Ordinary resolution or special resolution with 3/4 majority if the resolution requires special resolution. Then conduct a meeting of creditors. So after passing the ordinary resolution or special resolution, whatever is required, then the company has to call up a meeting of creditors. Conduct a meeting of creditors after passing the resolution. If majority creditors are of the opinion that winding of the company is beneficial for all parties, then the company can wind up voluntarily. That means the opinion, the consent of the creditors must be taken. If majority of creditors agree that this winding up proposal is beneficial to all the parties, then the company can go ahead in winding up of the proceedings. Next one, within 10 days of passing the resolution, file a notice with the registrar for appointment of liquidator. Remember this, After passing this ordinary resolution or special resolution, within 10 days, the company has to apply to the registrar of companies for appointment of liquidator. The liquidator is the administrator. After winding up, at the time of winding up, the person is appointed liquidator. He will take charge of the company. He will dispose of all the assets. He will pay the liabilities and he will settle the accounts of the members. So, fifth step. Sixth step, within 14 days of passing the resolution, give a notice of resolution in the official gazette and also advertise in the newspaper. So within 14 days of passing this resolution, the company has to give an advertisement that the company is going to be wound up and give a notice of resolution in the official gazette. The official gazette as well as local newspapers, the company has to give the declaration that the company is going to be wound up. Within 30 days of general meeting, file certified copies of ordinary and special resolution passed in the general meeting. Within 30 days, this resolution must be submitted to the registrar of companies. Certified copies of ordinary and resolution. Then wind up of the affairs of the company and prepare the liquidator's account and get the same audited. So after appointing the liquidator, he will take charge of the company's affairs. He will dispose of all the assets, he will pay the liabilities, he will settle the accounts. He will make a statement called liquidator's statement. That liquidator's final statement of account should be audited by the auditors. Then conduct a general meeting of the company. That means the company has been wound up. The liquidator has completed his obligation. He has prepared the liquidator's final statement of account. After that, a general meeting must be conducted. In the general meeting, pass a special resolution for disposal of books and all necessary documents of the company when the affairs of the company are totally wound up and it is about to be dissolved. The company has settled all the accounts. The only thing remaining is books of accounts. The books of accounts have also to be disposed of. That means all the accounts should be closed. So a special resolution has to be passed in the general meeting that all the books of accounts should be wound up, should be closed. So after this 10th, 11th point, within 15 days of final general meeting of the company, submit a copy of accounts and file the application to the tribunal for passing an order of dissolution. So within 15 days from passing this resolution that the accounts have been settled, within 15 days the company has to inform the tribunal, asking the tribunal to give an order for the dissolution of the firm. Then if the tribunal is of the opinion that the accounts are in order and all necessary compliance have been fulfilled, the tribunal shall pass an order for dissolving the company within 60 days of receiving such application. So after applying to the tribunal will scrutinize and see that all the compliances have been made in order to dissolve the firm. So if the tribunal is satisfied that everything is in order, is according to law, it will pass an order for dissolution. Then the appointed liquidator would file a copy of order to the registrar. The order, when he receives, this order will be submitted to the registrar. The tribunal will give the order to the liquidator. The liquidator will submit this order to the registrar of companies. The last and final step is, after receiving the order passed by the tribunal, the registrar then publish a notice in the official gazette declaring that the company is dissolved. So after receiving this order given by the tribunal has given the order to the liquidator has submitted the order to the registrar will declare in the official gazette that the company will be